This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Thursday, July 11th. Let's jump right in. There's a lot to cover today. Looking at breadth numbers, we had 1,174 new highs. That's more than yesterday. We had 101 new lows. 74% of stocks were advancing versus 23% declining. We had basically 34% of stocks below their 50-day, which is worse than yesterday. And we had 32% of stocks below its 200-day moving average. If I had to summarize the day, Russell led to the upside. The NASDAQ led to the downside. And we'll peel the onion as to potentially why. It doesn't really matter why as much as what actually is occurring with prices. But I'll pontificate later on. But taking a look at the Dow, we were only up 32 points, but we were up. The NASDAQ was down 364 points, basically 2%. The S&P 500 was down 50 points, or 0.8%. Looking at mega cap land, it was pretty bad for the Mag 7 and semiconductors. Everything else kind of held its own, and if you look at the Russell names, things were up very big, as you'll see when I go through what was strong, what was weak. But looking at the mega caps and Mag 7, we had basically what has been leading to the upside down the most. Tesla was down 8.4% on news that their robo-taxi is being delayed. NVIDIA was down 5.5%, which is very big. Broadcom in the semiconductor group was down 2.2%, Qualcomm down 4.2%, Intel down almost 4%, Micron down 4.5%. So that's where a lot of the bleeding happened in the semis. Microsoft was down 2.5%, Apple was down 2.3%, Google was down 2.7%, Meta was down 4.1%, and Amazon was down 2.3%. Taking a real quick look at the sector performance for today, real estate led to the upside. And now this is giving us a little bit more clues as to what's going on. Real estate didn't just lead to the upside. They were up 2.7% today as a sector. Utilities were up 1.78%. Basic materials up 1.5%. Industrials up 1.4%. Energy up almost 1%. Financials up almost 1%. And you take a look at what led to the downside. As I mentioned, it was tech down 2.25%. Communication services, which include things like Google, down 2.24%. Now, there's a lot of things I want to cover today, but let's take a look at potentially what is going on for today. So this morning, what do we know? We had CPI numbers come out, and they were not as bad as expected. And I call it the CP lie because I do not believe these numbers, because I'm a human and I shop. I went to the grocery store this morning. I travel and I pay for bills, and I know inflation is raging, but whatever. CPI data came out saying that the inflation rate of rise is decreasing. So that we know, the data came out and that's what the data said. So if that data is true, and that's all we have to trade on right now, fake data, if that data is true, then you have to assume that the Fed may potentially cut rates finally, because inflation is defeated. Okay, stick with me. So if CPI came down, or inflation, the rate of increase of inflation came down, the Fed can cut rates finally, and rate cuts is very good for USA based small cap companies. Why? Well, they predominantly focus their sales and revenue activities in the US. So they make their money in US currency. Second, they're smaller, so they have less access to credit, right? They're not sitting in a cash pile like the Mag 7 companies. So they borrow, and they're at a point where they need to refinance their debt. So if rates are cut, they're assuming that they could potentially refi their debt lower, so they can be operationally solvent. I hope you're sticking with me. So this is the logic. So if they're going to cut, potentially, the underperforming small caps increase today. But then you take a look at yields. Yields went down, so that's good for the Russell 2000 companies. But that should also be good for the NASDAQ companies. So my potential guess here is that money managers were overexposed to the Mag 7 and underexposed to the small caps. And while they, sold off their Mag 7 to fund the purchase of the Russell, when all of that new money went into the Russell, it created a semi-short squeeze because the Russell 2000 rallied 4% in one day today. That's not typical. So it's kind of opposite of what I said yesterday. Yesterday, things were great. And I said, this might be a one-day wonder, or maybe it's a new trend. We'll see. And then the next day, we see a complete flop. I'm going to call today's episode SOXS in my mouth because Louis, one of the paying members, and I'll share it because it's old news now, but yesterday we were having a discourse on the private chat and he was asking me about SOXS, and I still stand by it, but he wanted to build a position, or has built a position, on SOXS, and I mentioned that it's risky to go all in short right now because you have all of these bullish impulses. But if you're hedging long exposure with SOXS, I'm down for that. And today, SOXS, which is the short of semiconductor, rallied mightily. I know he's doing well on the few that he has, so I'm wishing him luck. This morning, I myself, when I saw NVIDIA struggling, I picked up a little bit on the short side to hedge some of my Mag 7 positions. So that's kind of the summary of, or the macro trees, the forest versus the trees view of today's session. Let's see. One of the things that was really also curious was when you take a look at vol-D, which is the NYSE up-down shares, we pretty much were bullish on vol-D breadth all day on the intraday basis. I'll share this on the show notes. And this is initially was very confusing to me because we had in one case all the Mag 7 selling off, the semi selling off, but all of this money on the NYSE was pushing shares higher. And then if you look at the Russell names, it makes a lot more sense, right? And when I go through what was strong, what was weak, you'll see it even more. So let's go through that. I'm not going to go through every single one because there was a lot moving on the plate today. But on the strong side, these are all percents. You had Kura Sushi, which was down yesterday. It was up 12.15%. A lot of these are going to be home builders because obviously if rates are cut, it's good for mortgages and it's good for home builders. That's the assumption. So you had Hovanian Homes up 11%, KB Homes up 10.3%, Restoration Hardware, which is housing related with furniture, 8.8%, Beazer Homes 8.6%, Tri-Point Homes 8.3%, DR Horton 7.2%, Toll Brothers 7.2%, Lennar 6.9%. These are all home builders. Pulte Homes 6.2%, ITB Home Builder Index 6.2%. And then you had Uber up 6.1, New York Community Bank 6.05, Paysafe 5.9, XHB Home Building Index 5.8, Pan American Silver 5.8, Affirm Holdings 5.1, Zillow 5.1, Extreme Networks 4.9, Lyft 4.6, Freshpet 4.4, Yext 4.4, MGM 4.4, Regional Banks 4.2, Hims and Hers 4.1, MicroStrategies 4, Zeta Global Holdings up 3.8, Instacart 3.7. You get the picture. There was a lot of Russell 2000 and housing up big today. What was weak? IREN down 13.18%, Tesla 8.4%, ARM Holdings 7.1%, Lam Research 5.9%, NVIDIA 5.5%, Qualcomm 4.2%, Meta 4.1%, Delta Airlines 3.9%, Intel 3.9%, Airbnb down 3.8%, Netflix down 3.6%, SMH 3.6%, the Philadelphia Semiconductor Index SOXS down 3.4%, Dell 3.4%, ASML 3.3%, Google, Alphabet 2.9%, Natural Gas Futures 2.7%, AppLovin 2.7%, Palantir 2.7%, Upro 2.5%, Microsoft 2.4%, Amazon 2.3%, NetApp 2.3%, Apple 2.3%, the NASDAQ Futures 2.2%, Coinbase 2.2%, NDX NASDAQ 100 2.2%, Broadcom 2.2%. So you get the picture. Mega cap, Mag 7, semis sold off hard, small cap, and real estate, anything interest rate sensitive that benefits from lower yields was bid up hard. For free members on Friday, you have PPI data coming out in the morning. Continue to watch the Mag 7 and the semis. Was today a one-hit blunder, and tomorrow they bid up all of these again? We'll see. We need to see more cards come out of the deck. For paying subscribers, I'm going to be covering over 25 charts today. One other bit of housekeeping. The promotional discount is over. If you are a free member and you want to try the premium content for free for 7 days, I will link in the show notes how to redeem that. So you just click the link, you choose the 7-day free trial. The credit card is taken from Stripe through Substack, and then you can cancel before the 7 days are up. And I will see you all after the Friday session. Premium members, please stay on. That's my train.
Stand clear of the closing doors, please.